Imagine this, it's December 10th, 2008. The global financial crisis is ripping through Wall Street like a chainsaw. Bernie Madoff, the 70-year-old titan of finance, sits his two sons down in his lavish Manhattan penthouse. His face is pale, his voice steady but broken. The business is a fraud, he confesses. It's all one big lie. Giant Ponzi scheme. He pegs the losses at $50 billion. His sons, stunned, alert authorities. The next day, FBI agents burst in. Madoff surrenders without a fight. In that moment, the man who outsmarted Wall Street for decades crumbles. But how did a kid from Queens build an empire that fooled the world? Flashback to 1960. Bernie Madoff, 22 years old, scrapes together $5,000 from lifeguarding gigs and borrows $50,000 from his in-laws. He launches Bernard L. Madoff Investment Securities as a penny stock trader. It's legit at first, matching buyers and sellers on the over-the-counter market. His father-in-law, accountant Saul Alperin, funnels in clients, friends, family, Jewish community members. Bernie's wife, Ruth, handles the books. Brother Peter joins as compliance chief. Sons Mark and Andrew later run trading. Niece Shanna becomes the family's legal shield. By the 1970s, Madoff's firm is a powerhouse, trading up to 5% of NYSE volume. He pioneers payment for order flow, paying brokers to route trades his way. In the 1980s, he helps build Nasdaq's tech backbone and chairs it from 1990 to 1993. To the world, he's a visionary, innovative, trustworthy, exclusive. But behind the scenes, the fraud ignites. A bad trade wipes out client money. Instead of admitting it, Madoff fakes profits. He promises steady 10 to 12% annual returns through a split-strike conversion strategy. Buy blue-chip stocks, sell calls to boost yields, buy puts to hedge losses. Sounds brilliant, but it's a sham. No trades happen. Client cash piles into a Chase bank account. New money pays old investors. Fake statements show consistent gains, even in crashes. The scheme explodes via feeder funds. In 1974, Alperin's successors at Avellino and Beans pour in millions. By 1992, they've got 3,200 clients and $454 million with Madoff. SEC probes them for unregistered securities, but Madoff skates, pays a fine. Keeps going. He hooks elites, Hollywood stars like Steven Spielberg, charities like Elie Wiesel's Foundation, universities, pensions. Affinity fraud targets Jewish networks. Trust me, I'm one of you. Minimum investment, $1 million. No audits, no questions. His London arm handles billions more. By 2008, fake balances hit $65 billion across 4,800 accounts. Actual cash, a fraction. Red flags wave like wildfire, but no one acts. 1999, analyst Harry Markopolos crunches numbers. Madoff's returns only 7 down months in 14 years. Impossible. He warns the SEC. This is the world's largest and registered hedge fund of fraud. 2001, Barron's article screams, "Don't ask. Don't tell." Madoff's secrecy stinks of front-running. 2003, Renaissance Technologies pulls out returns to steady, fees to low. 2005, SEC inspects, finds violations, but slaps a wrist. Markopolos fires off a 2005 memo, 30 red flags, including no volatility in volatile markets. SEC ignores it. Why? Madoff's ties. Niece marries ex-SEC lawyer Eric Swanson. Brother Peter's on industry boards. Tiny auditor David Freeling, a one-man shop. Madoff investor rubber stamps everything. 2007, FINRA flags no customers in parts of the firm. Still nothing. The house of cards teeters in 2008. Bear Stearns collapses in March. Lehman in September. Markets tank 38%. Madoff's fake funds up 5.6%. But reality bites. Redemptions surge to $7 billion. His Chase account dwindles from $5 billion to $234 million. He begs for cash to $150 million from philanthropist Carl Shapiro, $10 million from another. Desperate, he leverages client stocks for loans. By December, he's insolvent. Confession follows. Arrest on December 11th, bail at $10 million. But he's tagged and confined, chaos erupts, victims reel, Weasel loses $15 million. His foundation shutters, Pick Our Foundation closes. French banker Anathari Megan de la Villa down $1.4 billion, suicides. British investor William Foxton follows, Madoff's sons turn him in. But tragedy strikes, Mark hangs himself on the arrest's second anniversary. 2010, Andrew dies of cancer in 2014, March 12. 2009, Madoff pleads guilty to 11 felony securities fraud, money laundering, perjury. In court, I knew what I was doing was wrong. No deals, no remorse beyond words. Judge Denny Chin slams him with 150 years the max. Extraordinarily evil, Chin says. Madoff heads to Butner prison. Dies there in 2021 at 82. Accomplices fall. Brother Peter gets 10 years. Lieutenant Frank De Pascali cooperates, dies before sentencing. Bookkeeper Annette Bongiorno, 6 years. Programmers who faked statements, 2.5 years each. Auditor Freeling probation after plea. Feeder funds settle billions. Recovery. Trustee Irving Picard claws back $14.4 billion by 2020, which means 76% of claims. DOJ fund distributes more. But scars remain. $18 billion in real losses, shattered lives, eroded trust. Madoff outsmarted Wall Street by blending legit trading with fraud, exploiting greed, secrecy, and regulatory blind spots. He played the long game, decades of deception, but in the end, markets don't forgive hubris. The crisis exposed him. Lesson: question the impossible. Vigilance beats genius every time. If you like this video, hit like, subscribe, and the bell for daily stories like this.